Okay, yeah, so hello everyone. We are starting our webinar. So thank you all for joining us now. My name is Elena Grinyuk and I'm Regional Manager for the Central Eastern Europe at the SME Banking Club, and I will be your host today. And the topic of today's webinar is building data-driven digital banking experiences for SMEs. And I'm glad to be joined by Cesar Richardson from Strands. Hello, Cesar, and thank you for joining.
Hello, good morning, everybody.
Before we start and go to the topic, I will mention some organizational moments. So our webinar is scheduled for half an hour. We are recording this webinar, so right after we finish, you will receive the link to the video and to the presentation. And in the end of the webinar, we're going to have some time for questions. So please type your questions into the chat even during the presentation, and we will be ready to answer them in the end. And let's go to the topic. So, last week during our webinar on marketing automation, we discussed a figure that almost 40% of SME customers are ready to change current bank because the lack of the personalization, and the same number of the customers because of the lack of value-added services to help them to manage their business finances. So SMEs are expecting tailored offers from the banks that will be in the context of their real business needs, real-time business needs, let's say, and also the ones that will help them in their businesses. This requires from the banks better understanding of SMEs and sophisticated data analysis, and which of course will result into a long-lasting relationship with this segment. And banks own a large amount of customer data. So let's discuss how banks can make better use of data to identify customer needs and drive business value. So Cesar, I know that you at Strands are serving more than 700 bank implementations of your highly customizable digital money management software, and in 34 countries. So, and you and Strands have an expertise in big data, artificial intelligence, and machine learning since 2004. So I'm passing it over to you to share your experiences and insight on the topic. You're welcome.
It's great. Thank you, Elena, and good afternoon to all of you in Europe, and good morning to all of you in the United States. So, as Elena was presenting now, we'll be diving a little deeper into our BFM, or Business Financial Management module, our solution that is there to help financial institutions build digital transformation experiences for SME owners. The key problems that we're looking to address in the market today are the following. I like to summarize these in 4 steps. Firstly is the digital experience. So many financial institutions find themselves in a position where they would like to be able to take ownership of the digital experience, but in the past depended mainly on many vendors that were coming out with pre-packaged or pre-canned experiences. But as the banking experience has changed, and especially the dominance of the digital experience has changed, many large tier 1 and tier 2 banks want to be able to own that experience, build their own experiences, and do them themselves. The reality is that many banks inside take a long time to change, and there's a cultural change in the bank needs to change, departmental change, the way that they want to build these, and this is a very slow-moving ship to move, and essentially that's where Strands comes in as a fintech. We're much more nimble. We can come in and help the bank make these changes, and especially given the technology to be able to do that, which takes me to the next step, which is the legacy technology. So many financial institutions have technology that they've been embedding into their financial institution in the 70s, 80s, 90s. And a lot of that platform technology, whether it's in the core banking systems or payment platforms, they're all essentially siloed across the whole organization. And in many cases, there are from different technology platforms that not even communicate with themselves. So what Strands is able to do is to essentially create a customer experience there and a source of engagement for the digital experience, the digital platform to be able to communicate with across all of these different legacy technology platforms which are across the bank. And essentially in that process, generate an insights-driven experience, which is what we're going to be touching on now in today's presentation. Next is the raw data. So essentially banks have had access to huge amounts of data over the last few years, ever since they started being able to collect digital information through into their hard drives. But many banks have never had to really build a business model around monetizing that data. It hasn't been necessary. The majority of the banks are running on business models which depend on the yield curve and being able to extract value from deposits and loans and being able to stay with a spread on that. Now, as the market's changing, especially right now, and we're going to be getting more and more close to zero interest rates, banks are going to have to grapple and look at new ways of doing business. And my way of looking at that is trying to help banks move towards a data-driven model like Google and Facebook and many other technology companies, which are also moving in to compete within the financial services sector. And what we're essentially trying to do is help banks use technology to generate behavioral data patterns of the raw data they already have, but they're unable to be able to tap into the value of that data to be able to generate new revenue streams. And finally, we have the disintermediation of banking. So if the other options were really what the problem is, the final one is also the threat. So as open banking starts to make its way into the playing field, rapid development of mobile applications and technology, so the access to be able to build fintech competitor platforms against the banks, the cost of moving into this space is going down too, and also affordable cloud computing. So again, same concept as below, but access of scalable technology solutions to compete with banks is more accessible today than anywhere in the past. And through APA and open banking, some of the regulatory hurdles that were there before and still are, but they're beginning to go down and down. And that means the competitive atmosphere is increasing considerably. And in doing so, it means that customers essentially have more options, which is the great thing with this. Now, in this competition, you need to be able to remain competitive. And to remain competitive, you need to be able to bring out technology and platforms that are able to compete with these players. And this is where Strands comes and actually helps banks innovate faster and build these digital experiences in a record time. So if we now focus more on the small business solutions, this is a bit of a summary slide, but the main central value proposition of BFM is the idea of being able to build a cash flow centric projection platform. So the idea of being able to help small businesses as they log in and they start using the platform, aside of seeing what their balances are and transferring money, etc., is to really get an understanding of what their business, the position of their business is today and where it's going to be in the next 30 and 60 days. And by doing that, we then build in a platform, an insights solution, which Strands calls Strands Engager. And this is essentially a technology that's analyzing continuously all of this data that we're going to be looking at now in the demo, and is able to build contextual insights. And these insights essentially are positioning an issue or an observation that they've seen based on everything that's taking place within the company, and is able to then recommend a product, a service, a non-financial service that will help them run their business better. So you're essentially allowing technology to bubble to the surface the right solution for that customer so that they can have a personalized experience. And in the end objective of having a customer that's happier, but especially being able to engage the customer in purchasing new products and then essentially improving the conversion rate that the bank has for many of the services and products that they have by hyper-personalizing the solution using data. So as we move now into the demonstration, so you can get a little bit better of a flavor of what the technology looks like, I'm going to be showing a demonstration of our mobile application for BFM, also in being powered with Strands Engager, which is being able to position some insights in that experience so you can also observe that. If we're to sort of break down some of the key steps that are taking place, the first one is data aggregation, which we'll be showing you now. Data aggregation is essentially the capacity to be able to pull in transactional data from outside of that financial institution that is using Strands BFM. When we are able to pull all that data in, the next is to do the enrichment of the data. And that enrichment takes place in doing what we call transaction categorization. So taking all of that raw data, putting it through a categorization engine that is able to then explain to you where those expenses and income are coming from. And then we do additional statistical analysis on top of that so that you can understand how that expense is relevant, is compared to other expenses that you may have, and at the same time is also able to do other calculations, for example, how your business is spending compared to other people like you, etc. In the process of then combining these, we're then going to be looking at cash flow forecasting. And when we're able to do the cash flow forecasting, that opens many new insights, especially liquidity insights, that are the key ones to be able to help small businesses understand what's coming up with their company, or at least the financial side of their company, and how to be prepared for that. How are these being presented to the customer through insights? And then the very special next step is, when you have an insight, the next step is to be able to actually position a recommendation. And a recommendation really means is, how can we solve the problem that we found for you? And that problem is usually through, well, in the eyes of the lens from the customer, or from the bank, sorry, is trying to position the right financial product. But as you'll see as we're doing the demo, it's not just financial products. As we start moving into the next stage of digital banking, it's going to be positioning many more solutions, non-financial products, investment solutions, etc. So with that said, I'm going to move over now onto the demonstration of the solution. And what you're seeing here now on the screen on the left is the Strands BFM demo experience. First thing to really highlight here is that Strands is a white labeled solution. So this is demo experience, all of the platforms that we've embedded for many customers out of those 700 you've seen, very hyper personalized on the front end. The first step that we're looking at here now is how we can very easily and seamlessly include third-party financial institutions. So here we can see just examples here in the US, how we can connect multiple banks outside of the financial institution we're with now. And by doing so, get an understanding of what our share of wallet is from within the bank, but especially being able to allow the business owner to see all of their financial institutions and potentially multiple credit cards all on one platform. And this is using external account aggregation platforms, for example, in the United States, or open banking in Europe and other countries that are rolling out with open banking standards. The next one is how we're able to not only just pull in transactional data from financial institutions, but also alternative data. The key example here is how we can connect our platform to third-party accountancy platforms, such as QuickBooks, Sage 1, Xero, ClearBooks. There's multiple ones that we're adding right now. And this then allows the business owner to then start pulling in all of that invoicing data from their platform straight through to their online banking solution. So when they log in, they're also able to start looking at this data. There's two additional sides to this. One is the experience that the customer is going to have when they can start seeing their projected net cash flow, as you're seeing right now. But also the bank is, for the first time, going to start being able to see alternative data that they would have probably never seen for their SME customers. And there are many different ways that the bank can use this data to mine it and generate revenue from it. For example, invoice factoring. You can see here now in the demo what we've done is that we've moved into the future, and the tool's already helping us identify automatically what an insight is, what the insight is for a cash flow or liquidity issue that's going to take place in the future. The little icon there, when you click on it, it takes you through. This is an example of Strands Engage already taking place in highlighting that there is going to be an issue in the future. In this case, this is the insight that's being positioned. There's a liquidity issue, and liquidity is going to be compromised on a date. It explains to us below what the payment is that's generating this. It's a bonus payment for your staff. And then as you draw down, these here are the recommendations. So where the insight is the liquidity is being compromised, the recommendation is, or the recommendations are, the solutions to this. In this case, based on the issue, which is a small negative cash flow position, the bank is essentially saying, well, we can actually increase the limit on your credit card to cover this payment. or you can very easily just tap into a line of credit to be able to do this. So you can see here how we can present these different solutions, these different products to solve a problem that's being addressed through Strands Engager, identifying a liquidity problem in the future. The next stage is to really just give you also an idea of how information can be presented. So transactional data is usually presented just in a linear format, and you can just understand how your transactions have been moving on. In the case of BFM, we can also present it as a financial calendar. So you can see chronologically in the future and in the past when you're going to have net positive or net negative payments on certain days. So it really helps you as a business owner just being able to very quickly see when there is going to be a day of, potentially income and expenses taking place. And then as you start drilling down and start finding transactions on the day, you can start seeing here what's taking place. So a specific transaction is being categorized to show Zipcar. We can see here as well that the category is transport and renting. You're able to attach invoices or receipts to that invoice and then being able to store them on there too. The tool also has a powerful invoice platform as well. So for especially banks, but maybe even countries where accountancy packages or third-party accountancy packages aren't usually used by many small businesses, or it's a very fragmented business with many small little players. Many banks would like the option for their business owners to be able to issue invoices straight from the BFM platform. And we have an invoice module that we can activate, so you can do that. And it also synchronizes with the third-party platforms. Here we have another insight that's being pulled in through Strands Engager. In this case, the tool is able to identify that this business is going to have potentially a cash flow positive position over the last few months and into the future, and is a way of being able to try and help customers generate additional yield on their deposits. And in the process, position a savings product or some sort of money market instrument that's going to help the small business, perform better, or at least have their capital perform better while they have it, or additional capital while they have it. And then finally, we move on to another area. We have quite a few different tools that the small business can use. The ones that we are going to cover in the demo today are the budgeting tool and the provisioning tool. So the provisioning tool is essentially a way of being able to put money aside for specific target events that you may be looking at. And a key idea for small businesses is a VAT or a GST, a sort of a tax account where you want to be able to start setting funds aside as they're arriving. And you can automatically sweep those, so we can even connect this platform through to the core banking solution so that you can start putting that money aside for your tax, which you'll have to, depending where you are, but you have to set that tax payment quarterly. And you'll know that you'll have the funds when they're required. And the other one is budget. So how are you able to control budgets and sort of build a bit of an expense control within the company? And we have very interesting integrations of that platform with partners such as MasterCard, where we're able to even control specific cards, activate cards, and activate or deactivate cards using the budgets tool, so that you're always on top of how the cards and how your payments are being used by other people within your small business. So that brings me to the end of this high-level demo. I think what I'd like to really summarize from everything you've seen in this demonstration is that everything you're seeing here is very, very different to the traditional small business digital banking experience. Many small businesses today are sharing the same digital banking experience than retail customers or consumers, but they have very different needs. Our platform is able to create the right experience, but especially use data from within the bank, transactional data you've seen, or external data, bringing in third-party transactional data from other financial institutions, or alternative data, in this case, QuickBooks data, for example, or invoicing data, to be able to help customers better understand what's happening to their company within the digital banking experience, so that they see more value from that from the bank, and start seeing the financial institution as a partner, as an actual somebody who's there to help them run their business better. And that's one of the key takeaways from what BFM is doing, or how it's trying to add value to the final customer. That brings me to the end of the demo and the presentation. I'll put it back to you, Elena, and answer any questions if there are any.
Yes, thank you, Cesar. Well, I actually, yes, encourage our attendees to type your questions into the chat. Well, I have two questions at the moment. So first is this BFM and Engager solutions, they can be embedded to the mobile banking application as you showed, or it can be also implemented into the online banking, so that to have an access on the laptops, let's say?
Yes, and it's a good question. Yes, the solution is designed to work. It's basically multi-channel. So the demo is in mobile. There is another application. It can basically be embedded as well in the online banking solution. And more importantly, too, because our back end and our front end is decoupled through, basically a REST API that can be consumed across the organization. The Insights engine and the BFM solution can be consumed anywhere. So examples of this could be, how can we consume these insights in our CRM solution so that branch managers or relationship managers at a branch level can understand what situations certain customers have and be able to call them and help them with them. So you can see how it's not just digital, it's also seeing how these insights can be used across the organization, and Strands in that sense acts as a platform to be able to communicate all of the insights and that data to any channel that's within the bank.
Mm-hmm. Yes, yes. So we have another question and comment. So yes, we will send a copy. So we will send a presentation and the video actually after we finish. So yes, we will receive the materials. The next word, is it like a white label Starlink bank solution? Well, Cesar, you mentioned that you do a white label, right? So I think
it is white label, correct. I can't show you examples, but if you went to see examples from, we've got many customers, but, for example, HSBC or Santander or even Huntington here in the United States, the front end experience is very, very different for every single one. But that is the big value play for a bank, is that they can actually customize and align the final look and feel to the brand of that bank. But more importantly, every bank will have a different way of wanting to build a user experience. The user journeys that banks want to define are not defined out of the box by Strands. We work together with our banks in a consultative manner, and we explore what the bank is trying to do. We phase this project too. So another important point to mention here is that we don't just implement the whole thing in one go within 6 months. We phase this project out and we launch a first phase on the solution. Then we work on top of that over the next phase, etc. So it's a white label platform, but it's essentially a project between both banks to build a custom solution.
Mm-hmm. Yes, the next question from Luca, but also this also was my question. So how long actually does it take from the bank to implement some solutions in sense of time, in sense of resources probably as well, because that due to the reasons you mentioned, to different reasons, customers are demanding this, and still I can recall maybe 1-2 examples here in the Central Europe from the bank that's really implemented such prediction, cash flow prediction, when the customer can see which cash flow they will have, for example, I don't know, in a week or 2 weeks or a month, and it is automatically like that you can press and it shows you that here you will have a red saldo alert, like say that you will have no money to pay either your salaries or to pay some suppliers and something and it's automatically in online banking and mobile banking. It suggests to the customer, to either take a factoring or apply for overdraft or contact with RM. So how long actually does it take to implement such a solution in terms of time and probably resources from the bank as well?
Yeah. So on the time front, one of the key ideas, is a very fast time to market compared to the sort of the build rather buy for a bank. So what we usually discuss with banks, we've done go to markets from kickoff to go live as short as 4 months. In that case, we did actually 4 to 5 months with Deutsche Bank back in 2014. I'd say that the average length from kickoff to go live is anywhere between 6 and 8 months. And then what we usually do is phase that out into a phase 1, phase 2, phase 3 project. So that moment where we're actually coming out with some more, I want to use like traditional notifications. So notifications that don't require advanced analysis, we can do those within that first phase. And then we move into a much more advanced process of sitting down together with a bank. If the bank has a data science team, we work with them to build custom insights for their customers. And if the bank doesn't have them, we can actually become an outsourced partner to develop those insights with the bank and with the data the bank has. That could then last another 6 or 7 months to roll out those more advanced insights. And then the team that the bank requires to be able to roll this out, well, to be honest with you, it really depends who in the bank is there. But there's a certain part of the project that requires some heavy lifting, and it's usually like database teams and internal project managers. And then the actual front end and developing what that experience is going to look like can either be done all in-house, so banks that have actually ramped up those teams, so they have developers and they have UX specialists, etc. Some banks actually work with a UX agency who actually develops the mock-ups and the wireframes and what the solution is going to feel and look like. And then the bank may have developers in-house do that, or they may not. And if they don't, Strands developers come in and develop the front end on behalf of the bank or for the bank. So there's very different hybrid models in doing the project. But in my experience, seeing some banks that have actually taken ownership of the whole project in-house, I've seen anywhere of teams between 20 and 30 people working on this over about a year and a half. And that's usually when they're just using Strands BFM exclusively as a platform, and they want to develop everything from the front side themselves.
The next question is, what is the cost of a white label service?
Well, the cost really is, today, the cost of our solutions is very much aligned with the total number of online banking and mobile banking users in the bank. And we follow the traditional license, maintenance, and project-based pricing model. And if anybody's interested in understanding a little better, just reach out to us, and we'll have one of our relationship managers speak to yourselves and dive a little deeper and be able to prepare some proposals for you.
Mm-hmm. Okay, yeah. The next question is, what are the costs for an SME customer? Well, I think maybe this is also a pricing policy of the bank as well.
Yeah, it's a good question. Essentially, it depends on the business model for the bank. But what's very interesting about BFM compared to its sister, which is PFM, which has existed for many, many more years. PFM is personal financial management, and that's for the retail and consumer. Retail and consumer, this technology in many eyes is already seen as a commodity. It's like a must-have in solution. And you can't really price it. But BFM is very different. Many banks today, again, I know more the US market than others, but there's the banks today that charge businesses $10 or $15 a month simply to have a tool that can extract raw data to a third-party platform like Quicken or a solution that can do some of these things. They get charged just to extract the data. So with that in mind, businesses are used to being charged for value-added services. Therefore, the ROI component on this technology for a small business is easier to project and calculate, because it's quite easy to see that a technology of this sort can be charged, or you could embed this technology as a value-added service for premium small business customers. So you can actually define different things. You can sort of attract high deposit customers to this technology and lock in higher deposits. It's really up to the bank what the strategy is. but BFM does have a very strong ROI component because you can essentially charge for it compared to retail.
Yeah, I think that in several years, like in 2-3 years, this will be a new must-have, because now all the standard functionality, like doing different transaction in foreign currencies or everything, this like is available in each bank, and this is not what differentiates banks anymore. So, and having such tools like BFM is differentiating banks on the market. So this will be one of the reasons why SME customers are choosing the bank. So I think this will be a must-have in several years, because customers are expecting already these services from the banks. Okay, so what countries is this working in today? Any regulations or similar differences?
Today, BFM, I think we have the BFM essentially in all the regions we cover. So Strands essentially has offices worldwide, Asia, Europe, and the Americas. And we have BFM running in all of those regions now. As to the second part of the question, I believe you said, is there regulatory requirements? I don't know if I understood that correctly. I believe you basing that on open banking and the ability to integrate open banking, or did I not understand correctly?
For Europe, yes, the PSD2 is given such a possibility to integrate into this account aggregation. But what we see now, this started to be used by the banks for the individual customers. Not very intense, but still we have some examples, mainly in Poland, in Slovakia, for example. But for business customers, still it is not used at the moment. So by fintechs, by the way. So by fintechs, yes. By banks, not so actively. So yeah.
Yeah. So that's a very interesting point you said. It's used by fintech, but not banks actually. And that is essentially what BFM is there to do. It is there to help banks compete with banks who are very slowly moving into their space, especially with small business. There are very interesting stats that are coming out now, but many businesses, like the number of businesses that are reporting using platforms, third-party technology platforms such as QuickBooks, Square, Shopify, etc. The majority of digital-first companies use all these platforms. So the ability of these platforms to compete with banks for traditional financial services is going to increase rapidly over the next 2 to 3 years. And this technology allows the bank to be able to essentially compete with them, but also differentiate services. And I would even say partner, because the minute that you have a platform like this and you can integrate BFM with QuickBooks, Xero, one of these, it allows the bank to also approach some of these technology players and actually come to an agreement, a partnership agreement, to be able to deliver their technology to their SMEs integrated to an actual BFM platform and not just a traditional online banking solution.
Yeah. Okay, so let's go to the next questions. We have some still. So the next is, can you give some more details on how do you enrich transactions? How is the categorization process is going?
Yeah, so the categorization process, when we do the integration of the platform, we usually sit down with the bank and we essentially are trying to understand how the data is stored, what platforms that data is stored in, especially what metadata is linked to all those transactions. And every bank is totally different, usually because every core banking implementation is very different too. And our aim is to try and grab and in some cases even rescue the best metadata available within the bank. And when I mean rescue, there's lots of things. Many core banking solutions to nowadays, even when they were built, they were designed in such a way to actually pull in transactional information and throw away the metadata because it was not really that valuable to the existing platform back in the day. So sometimes we've actually sort of done a bypass where we pulled in metadata from processes, third-party processes at the bank, and are able to sort of attach those transactions back to the data that we're getting from the core banking platform. And in the process of doing this and keeping the data and the metadata as enriched as possible, we then build a series of rules or categorization rules that are able to then do all of this categorization process. And we'll sit with the bank and tune that categorization process so that we reach accuracy standards that are around 90 to 95% before we go into production. And that's an iterative cycle that takes, in total, about 2 to 3 months. But also takes place in parallel as the rest of the project's going too. But it's one of the larger components of the project, as we're making sure that the categorization accuracy is high, and that high categorization accuracy is important. It's also worth mentioning too that Strands our platform delivers what's called a back office module, so that the bank can actually monitor and analyze how the accuracy is taking place when you move into the production cycle. And then the tool enables business analysts, etc., anybody in the bank that doesn't necessarily have to be a database developer, to continue making sure that the accuracy of the categorization engine remains high. And they've got a series of tools so that they can identify transactional changes that are being taken place by customers, bubble them to the top so that they can see, for example, this new merchant has been recategorized by more than X number of people from X to Y. Would you like to apply this to all of the customers? And these sort of rules and tool sets are used so that they can maintain the categorization accuracy at very high levels, and don't really require that much work from within the bank.
Okay, cool. So next, can it aggregate loan information also, and does it also has artificial intelligence capability to provide advice to optimize the financial?
The answer for loans, yes. We can pull in loans data. Yeah, for sure. We can pull in information on loans and even additional information to the loans as well. I mean, depending on how database model is designed to pull those, and if not, we can work with the bank to add additional ones. Examples of that might be, for example, we have a source of credit risk scoring data, which we want to be able to pull into your data model as well. And if we aren't able to pull that in today in the data model we have today, we can do it for the bank by sitting down and actually doing that custom work with them if it's requirement. And then I believe the second part of it was if you can generate insights that pre-calculate
like predict financial.
Predict financial, yes, essentially. I mean, one of the examples of one of the insights that I've presented to some customers is the idea of being able to, for example, with our credit card programs, many cashback programs are based on category spend. So we're able to predict how much money you would have saved using the bank's credit card versus a competitor card program that you may be using today, by understanding your average spend under a specific category over X number of months. And you can compare the difference between using the bank's credit card and a competitor credit card, all using Strands Engager. So you're able to very easily understand what the cash discount or the cash value would have been without, and then essentially use that as an entry point to then try and either activate the card if there isn't a customer, or in some cases it's just a marketing program so that the card becomes top of mind, so that customer, the next time they go and spend, they may think twice before using another card because they realize that they could have saved money if they would be using the bank's credit card, based on whatever it is that the bank, assuming that there is a discount on using your card in gas stations, say, or in supermarkets.
Okay, the next is, can you forecast tax and other expenses calendar and improve the forecast view for SME and reduce the cash flow risk? So this was actually what we were discussing.
I'm not so sure about that whole question, but what I can say, I know that one of the modules that we've developed for one of our UK customers is the ability for the bank to be able to do essentially send in their tax digitally straight through to HMRC. So the tool is able to now start tapping into different types of, the different bodies that are managing the tax in your region, and be able to do automated tax declaration. And we've done that in the UK, and I'm sure we can do it in any country that is also developing a digital format for the delivery of tax data straight from the platform.
Yeah, this is actually crucial to have this. Yeah, I think that actually there was a discussion. What is the difference between PFM and BFM? And Miriam, thank you. She answered in the chat. So yes, PFM is used for the individuals from the analysis of individuals, transactions, cost and finances, let's say, and BFM is for the businesses. Yes, for SMEs.
That's exactly it. That's the difference between both.
Yes. What kind of other innovative functionalities, other than the ones discussed, do you see of interest of the next 2 years for SMEs?
One of the ones I personally like is a concept called business benchmark, and it's like sort of customer insight. So it's essentially allowing businesses to be able to compare how their business performs compared to other competitors in their region or locally, right? And there are very multiple different data sources that we can use for that. Our partnership with MasterCard allows us to work with them, to work with one of their solutions, which was before called LMI. I think the name of the product's changed now, but essentially they have a very rich data set, and we're able to lay that over so you can sort of see a heat map of how you are spending, or essentially how you're generating business based compared to other competitors in the space. When do they spend, what time flow, what times do they spend at compared to you, what's the average demographical data of the people who are spending in other places compared to you. So as a small business owner, you can potentially start working on the marketing that you want to use for your existing business, or you may be looking to expand and you know that you want to build another shop in the town nearby, but you want to really understand what the competitive landscapes they're like compared to your business and try and make decisions. So we're working on solutions like that, which are very powerful. And then also, I think also through Strands has recently been acquired by CRIF, who's a large credit bureau who's headquartered out of Italy. They're a very rich data platform or data provider. And there are many, many interesting data points that CRIF today have that I think will add a lot of value to the Strand solution, and especially what the future roadmap of the platform will look like. You'll be able to envelope some of that data into the platform and provide considerable value to small business owners too.
Yeah, thanks. Yes, there are also questions. Will we share the presentation and the video? Yes, this will be available after the webinar. Sure, we will send to everybody. So the next question, probably two last questions, are how often do you release new versions, and how does that impact cost of ownership?
The actual, we do, like, annually we do a full version upgrade approximately every year, and then we do smaller versions or subversions throughout the year. But these are all optional. So the tool's always designed to be, sort of backwards compatible, and the tool there is no one forced to take the upgrade. It's just that essentially as very new features take place or are added to the system, if they require an upgrade, well, then we'll be discussing those and we'll work with the bank to do the upgrade with them. But essentially there is a continuous development cycle on both PFM and BFM and Engager.
Yes, and I think the last question for today is, based on your experience, what bank need as a prerequisite to get this kind of solution to be integrated, and more important, to make it flexible to use during the next going forward?
Okay, can you repeat the question again, Elena? I didn't catch the beginning.
Yes, based on your experience, what bank need as a prerequisite to get this kind of solution to be integrated, and more important, to make it flexible to use going forward, so in the next steps when it's used with the customers?
I would say to me, the biggest prerequisite is alignment across the organization for digital transformation to take place. So when we're looking at even some of these examples here about delivering BFM, it impacts very many different parts of the bank. So The head of credit cards can obviously see where this would be impact them, but if they're on board, that's important. Having obviously the head of digital banking, having the CIO on board, having the head of marketing on board, and having the analytics team also understand the value of the solution. And the minute that all of those stars align at the same time, the value of the platform and the success of the project is, exponentially higher, because this has an impact across the whole organization. This is a digital platform for the whole bank. And in my experience, I think when I've seen banks align across all of the departments and all see value in this technology, that's when the projects are the most successful. Obviously, you need to have, be it small business customers, and some of the comparative data would require banks which have a larger, smaller, small business customer set. So imagine you have a bank and it's got 1,000 SMEs. It's very different to a bank that has 100,000 or 200,000 SMEs. So you need to have a minimum, user base, so that some of the comparative analytics and etc. actually are relevant. But that's not a real prerequisite. It's just that some things work better than others. But I think the big prerequisite is the first point I mentioned.
Mm-hmm. And what is from your opinion, you said the minimum user base. So from your experience, what should be the minimum number of SMEs in the bank?
It's very hard. I mean, like my gut would tell me something around the 50,000, 40,000 mark. But I realize too that every region is very different, right? I'm very focused on a specific region in the world. I don't really, use that as a real cutoff mark. I mean, I use it sort of as a vague one, but it's not key. And also, as Strands evolves in the way that we deploy our solutions, we're moving into delivering our solution soon in a hosted and SaaS environment. It really will change the finances essentially, or just the capital investment of this technology considerably, and it will allow much smaller banks to be able to leverage this with much smaller subsets of SME customers. So the answer really for that is it's evolving, and in the next 12 to 24 months, the size of the SME team will be more and more irrelevant.
Mm-hmm. Yeah. Okay. So, and the very last question that we received right now. So, can you share some thoughts on how you go from a messy, uncleaned transaction descriptor to the correct merchant name? Do you use any external solution or APIs to assist on this?
Yeah, that's a good question. So that's actually a solution that's already embedded in the Strands platform. It's called label simplification. It's part of the categorization process. And it's essentially a tool that is able to look through dirty descriptive data, which is what's being pushed to us from the core banking solution. And it goes through a process to read that, identify it, add a new text, and in some cases even add icons. So some tech, for example, a mobile, you'll be able to see the name, and you'll be able to say the logo of that company on the side of the transaction too. That all takes place using the Strands categorization engine, which is one of the modules within that is called label simplification, which does that.
And the very last, which PSD2 data can you access out of the box? Well,
can you repeat that again? Which data can you?
PSD2 data, so this open banking directive, can you access out of the box?
Very honestly, I'm not very sure. I'd have to find out exactly. I mean, I know that the data that we obviously bring in today is the transactional data, which would be description, date, integer, and amount. But if there is additional data points that are available and we can add to them, I can't answer the exact answer. My high-level answer would be yes, we can. We've already integrated with other banks that are using PSD2. But again, if there's a specific question like that, I'll get someone from our product team to get in touch with the person who's asking the question, and we'll give you a more detailed answer.
Okay. Yeah, so we will be closing the webinar. Thank you all attendees who stayed with us till the very end. Thank you for your engagement, and thank you, Cesar, for your contribution.
Thank you all. Thank you, Elena, and have a great day.
Yes, you too, and see you next time online. Thank you and goodbye.
Goodbye. Have a great day. Thanks.